many years has been the global average allocation to gold, the portfolios over the decades, like 4-decade mean is 2%. And he'll tell you, I'm sure he's told you this, and it's currently around 0.5%. So we don't have to go crazy, everybody buying gold. If big money around the world simply reverts to mean, that's a 4x, from 0.5 to 2, is a 4x increase in investment demand for gold. I think that might be what we're seeing this year. If it's not just the Chinese, right? If it's not just the central banks, if it's not just war scare, what is it? There's not one big headline catalyst you can point to. Therefore, it's a shift. Someone somewhere with big money has shifted.
The gold market has recently experienced significant volatility, with prices fluctuating dramatically. Despite these challenges, the precious metal has shown resilience, trading at $2,394 per ounce. This recovery comes amid intense market pressure and speculation about gold's future performance. J.P. Morgan's bullish forecast suggests gold could surpass $2,500 by the end of 2024, indicating strong potential for further growth. However, analysts like Lobo Tiggre of Independent Speculator offer a more nuanced perspective. Tiggre argues that the recent price surge isn't attributed to any single event, but reflects a broader shift in global investment strategies and perceptions of gold's value. This shift occurs against growing de-dollarization efforts, mainly led by the BRICS alliance. The bloc, which now includes 9 member nations, has been actively working to challenge the US dollar's dominance in global finance. Their recent confirmation of plans to develop a new currency underscores this commitment, with further updates expected at their October summit. Tiggre points out that geopolitical events, such as the Ukraine-Russia conflict and the seizure of Russian assets, have accelerated this trend. As a result, central banks worldwide are increasing their gold reserves, seeking to diversify away from dollar-denominated assets. The significance of the BRICS Plus alliance in this context cannot be overstated. Representing approximately 45% of the global population, 30% of the world's land surface, and over 37% of global GDP, the bloc wields considerable economic influence. While not as tightly integrated as entities like the European Union, BRICS Plus nonetheless represents a formidable force in reshaping the global financial landscape. Please tune in for our exploration of Lobo Tiggre's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
I never say gold price. I always say gold-dollar exchange rate.
Okay.
Because in my mind, gold is money, has been for thousands of years. I know I'm not the first one to tell you that. And therefore, gold versus dollar is a Forex question, in my view.
Okay.
And that's not just being pedantic or theoretical. I think that's really important that people remember that gold is money and treat it that way. And I think the world is actually remembering that now. And I think that's part of the answer to your question. It's not the price of gold like the price of coffee or even copper. It's gold versus dollar.
Okay.
Like, where do I want my savings? How much do I trust the greenback? And in this world, more and more people, the weaponization of the dollar, I'm not the first one to tell you that. I'm sure the audience has heard that too. Like, these things are real and they matter. And it doesn't mean that, a la Brent Johnson, that everybody dumps the dollar, it's the end of the dollar tomorrow. Or August 24 last year when the BRICS were going to adopt a gold-backed currency, right? Never mind all these crazy headlines. The trend that's happening now, and even Brent would agree with this, the trend is there towards de-dollarization. And the impact of the consequences of Ukraine's second war with Russia, the second invasion of Ukraine. And, and now, they're talking about just taking the interest on Russia's seized money, but it's still taking Russia's money. I'm sorry, you can legally massage that all you want. But the point is that they're taking Russia's stuff and dollars. So what does that do to anybody else that holds dollars? Obvious. And we see the central bank buying of gold. I think it's a perfectly natural and logical thing. And it's really interesting to me that we've had now 2 months in a row where China has reported not buying gold. And when the first report like this came out, gold tanked in a very visible way. Second one came out, gold just kind of wobbled. If China wasn't buying any gold all of June, which I don't think is true, but let's say it was, and gold still went up to, within kissing distance of 2,400 last Friday on the close, without China buying, that tells you it wasn't just China, which comes back to the first answer to the big what's going on now. The trend I see happening now, and I can't prove this, Danielle, this is a theory.
Okay.
But it's not just China.
Right.
And it's not just the central banks. And my reason for this, the evidence that I can point to, is that we saw a hockey stick in gold this year. The gold dollar exchange rate really, 2,300 is the new 2,000 in gold, which is like, but the central banks, the global south, they've been buying gold for years. That doesn't explain the change this year. Even the new war in the Middle East, that's last October. And so if you're going to be, buying gold as a safe haven because war in the Middle East is not a good thing, right? That's last October. It doesn't explain the hockey stick this year.
It doesn't.
So therefore, this is my explanation. Now that doesn't, again, this isn't a proof, but my explanation is that we finally reached that Minsky moment, the aha moment, whatever you want to call it, where more and more people are starting to say, you know what? A little bit of allocation to a safe haven like gold is not a bad thing. Boy, this is a long-winded answer, Daniela, but I am getting to your question. This is another Rick Rule thing, right?
Yeah.
Right. His thing, his shtick for many years has been the global average allocation to gold, the portfolios over the decades, like 4-decade mean is 2%. And he'll tell you, I'm sure he's told you this, and it's currently around 0.5%. Yes. So we don't have to go crazy, everybody buying gold. If big money around the world simply reverts to mean, that's a 4x, from 0.5 to 2, is a 4x increase in investment demand for gold. I think that might be what we're seeing this year. If it's not just the Chinese, right? If it's not just the central banks, if it's not just war scare, what is it? There's not one big headline catalyst you can point to. Therefore, it's a shift. Someone somewhere with big money has shifted.
As gold prices continue their upward trajectory, investors are closely watching the performance of gold mining stocks. Despite the precious metals price increases, these stocks have historically underperformed since 2020. Lobo Tiggre suggests this trend may be on the verge of a significant shift. Tiggre expresses optimism about the future of quality gold stocks, predicting that they may soon begin to outperform and demonstrate the leverage to gold prices that investors have long anticipated. This potential turnaround comes when the gold market shows renewed vigor, with prices reaching new highs. A prime example of a company poised to benefit from this shift is Barrick Gold, the world's second-largest gold producer. Barrick is well positioned to capitalize on rising gold prices with a production target of 3.9 million to 4.3 million ounces for 2024. In the first quarter of 2024, the company reported an average realized gold price of $2,075 per ounce, reflecting the strong market conditions. Adding to the positive outlook, Barrick anticipates a decrease in production costs and an increase in production during the latter half of 2024. This combination of factors could potentially boost the company's profitability and, by extension, its stock performance. Let's get back to the interview.
The highest correlate since 1971, since Richard Nixon, completely severed gold from the gold standard, there are multiple variables. And clearly, something like war scare does move gold. And you can see gold moving directly inversely to the DXY, the dollar index. So therefore the dollar, supposedly. You can see it on a daily basis. So that's a factor. Other things, there are multiple factors. There's no one variable. But the one strongest correlate for 50 years has been real rates. It's been some months now. Actually, it was late last year or sometime last year. But I ran the correlations, and actually nominal rates had a higher correlation than real rates as of last year. Over 50 years, like something has changed. The portfolio allocation question is something that I think, I can't give you a statistic. I don't have a number here. But I'm seeing this more and more on mainstream financial media, not gold bugs, not Peter Schiff, right?
Yes.
But some guy from B of A or some big hedge fund saying, well, we're putting a little bit more in gold now. Or like when people say, Tina's broken, what do we do? And somebody says, gold.
Like a goon lock.
Right. And before, they used to get laughed at.
Yes.
Like, what are you going to do? Gold?
Right.
Like that has gone, that has changed from, what are you going to do? Buy gold?
Right.
To, well, how about some gold? That's, if that fits what I'm saying of this change, putting the pieces together, and back to your question, which I do remember, believe it or not, right? So I think this is happening now. This is a trend that is measurably happening now. And I'm not a technical guy, but for gold to bounce off 2,300 repeatedly and then head back up again, that's showing some really interesting strength. despite a strong dollar and these other
Yeah.
things. So, but the gold stocks have underperformed. What the heck's wrong with the gold
Yeah.
stocks? There's a free article on my website. Are gold stocks a broken asset? The truth is that they have underperformed since 2020. They had this huge spike in gold, and they've been underperforming. So the short version would be this breakout this year, they're performing. That leverage is back. The mojo is back, if you will. So no, they're not broken. Now, why did it happen? I don't know how much time you want to spend on it. I think there are reasons. But the short answer is no. Like we can see this year has demonstrated, gold shocked people, people paid attention to it, and then somebody said, well, how do I get leverage on this? Gold's working, what gives me leverage to this? And you could see, gold moves 1%, the good quality gold stocks move 3, 4, 5%. That's why we bother buying these stocks at all. And I understand that's been very disappointing since 2020 for that seemed to be broken. But I don't think it's just a fluke that we saw this year. I think the reasons why, expectations, all kinds of things, why it wasn't working so well in recent years, I think this breakout this year has brought that back. And if it continues, like if gold goes downhill from here, and if I'm completely wrong, all of us here at this conference are completely wrong, gold's going back to $700 like Harry Dent promised us 20 years ago.
Good old Harry Dent.
Good old Harry Dent, right? So
yeah.
that would be bad, but that's not what we expect.
Yeah.
If you're at this conference, or probably if you're watching this interview, you do expect the gold dollar exchange rate to go higher, and you want your frickin' gold stocks to go even higher. And I guess if you want to make this the Lobo waves his arms scene of the interview, I do think you'll get your payday. I do think those stocks, the better ones, not your crappy moose pasture stocks, but the ones that have assets that matter, that actually have any gold, I think you'll get your payday.
As we consider the intricate factors influencing the gold market and the performance of gold mining stocks, how will the current global economic changes, such as central banks diversifying their reserves and the potential introduction of new currencies, affect gold's traditional safe haven status? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.